On today's hot sheet, I'm discussing housing inventory for the past week, the June FOMC minutes out of the Fed, and Redfin's June rental report. Today is Monday, July 14, 2025. I am Byron Lazine, and the hot sheet starts now. Live from Connecticut. It's good to be back, not only in Connecticut, but back with all of you here on the hot sheet. Little couple days off last week in Vegas. Might have saw it on Instagram. Had a couple meetings out in Vegas, some BAM stuff, some cool stuff coming. One of the biggest things that is coming, though, is undeniably what's happening Wednesday, BAM BBQ. Instead of telling me where you are tuning in from, I mean, still tell me that. Raleigh, Milwaukee. I think I've been saying Raleigh correctly now. I think I've got it nailed. Las Vegas for Maria. I was just there, Maria. We could have hung out at 8. I was at 8 Lounge Resorts World. Long Island's in the house. Love seeing where everybody's tuning in from. But tell me if you're coming on Wednesday, okay? That's the biggest thing of the week. Maybe the most important moment of the summer. I know a lot of folks have been, Haley told me about her weekend, graduation parties and birthday parties. Any drinks, Haley?
Of course.
Of course. Of course. She's already drinking away her sorrows for the Eagles not being able to defend their Super Bowl title coming up this fall. But a lot of stuff's happened over the summer. Beach time. Okay. I mean, there's a checklist of all the things that my wife had with the girls over the summer. They had like 25 items. They've checked off 23. People are rolling through summer. Well, I'm not joking when I say this. This is the biggest thing happening in real estate for the summer. It's the BAM BBQ. You've probably been to some BBQs. Won't be as eventful as this one. It's Wednesday, 12 p.m. Eastern, 9 a.m. Pacific time. We've got Ryan Serhant Technologies. We've got Leo Perea, EXP CEO, and Scott Harris, who's the Experience.com CEO. So a lineup of CEOs midweek. It's a heater. These three are bringing the heat. Myself, Eric Simon, the broke agent, are manning the grill. This is a free event. Make sure you lock in your spot. We've actually had these things cap out in the past. So use the link down below, bambbq.live. I see Pat Tasker is going to be with us on Wednesday. Trisha, Debbie, whole bunch of you guys are going to be at the BBQ Wednesday, noon Eastern. Make sure you're there. All right, let's take a look at inventory here for the last week. I mean, talking about heating up, inventory really heated up a week ago. And then now we had some of the remnants of the 4th of July holiday hit. So this is the weekly inventory change from July 4. July 4th, if you remember, was on a Friday through July 11th. So the hangover of the holiday, my apologies there, the hangover of the holiday not only lasted, Saturday and Sunday, but it also lasted throughout the remaining week. We saw inventory go from 853,000 the week prior to 846,000, almost 847,000 on single family homes. So an actual drop in July on inventory. If we take a look at last year, 2024, we saw inventory continuously increase. Did see a slight dip in July of last year, but that was only about 1,000. And we're operating at much lower numbers, to be fair. Last year, same week, we increased, but we were outside. This is same week of last year was July 5 to July 12, increased from 645 to 652. So dramatically lower numbers, 200,000 less. But essentially, we increased inventory all the way through into October when we peaked at 739,000. We're well beyond last year's peak. In fact, we're above 2019 lows on inventory with 30% more than last year at this time. But we did see the decrease now last week relative to the 4th of July holiday. We'll be looking for an increase going into next week. So a week from today, when we recap this week, we'll be looking for another increase on the march to 900 plus thousand on single family homes as calculated by Altos research there. So inventory does take the drop. New listings took a sharp drop as well from the week prior. 69,000 the week prior, down to 60,000 here in the holiday week. 60,726 is what we added for new single family listings. Same week last year was only at 56,000. You do see a decline. New listings second half of the year not only decline now here in July, but they continue to decline throughout the end of the year. I do expect a little bit of an increase here as we go over the next couple of weeks. But as we move forward for the rest of the year, outside of rates really being a tailwind here, we do expect, if we follow just normal trends, that new listings will drop. What's the motivation without a rate getting lower for more single family sellers to come to the market unless they have a real need to sell? All right, properties with recent price reductions. These are sellers that do need to sell, that have a strong desire to do such. 40.7%. This is one of those leading indicators that tells us property appreciation, home price appreciation will be much lower, if any at all, in some markets as we move forward towards the end of the year. 40.7% of sellers reducing price in order to sell. That's the highest number in over 5 years on price reductions. Usually it's about a third. In a normal year, you would expect about a third of sellers to reduce the price. So we've got our inventory here update, and that new listings was down. Now, a lot of this is going to be driven by this number here. It's the mortgage purchase application index once we start getting into pendings, okay, which we're going to take a look at in a second. What are the future pendings? What are the future sales? If we absorb some of this inventory, then we could see, obviously, appreciation start going back up the other direction. Right now, we have the opposite thing happening. We do see a future that looks brighter as it comes to mortgage purchase application. We have 23 straight weeks of positive year-over-year data, 10 straight weeks of double-digit year-over-year growth. This is looking much better than last year, albeit still at lows compared to the GFC recovery, as well as going all the way back to 1995. Weekly pending sales also moved down off the holiday, 61,000 on weekly pending sales. That was coming off a week of 67,000. Typical for this time of year to see a decrease after the holiday and then a decrease that continues on weeklies throughout the year. I do expect, similar to last year, that we'll get a little bit of an increase here, late summer outside of the holiday before we have that end of the year certain decline that we get as we lead into the holidays. Total pending home sales come in at 387,590. This is off of above last year's number at 381,000. And also starting that seasonal decline. Still, as we look forward, plenty of opportunities that those mortgage applications show us just that there are opportunities in the market. We'll take a look at what could happen with rates this week as we get inflation this week. This is supposed to finally be the time when inflation is going to give us, all the tariff numbers are going to be in there. It's the third month now of tariffs, and the tariff data is supposed to finally be in this inflation report. That's what they keep saying. We'll take a look. Maybe it will be. We'll see where inflation comes in this week. That's just a little bit of what's coming. Where the Fed was last meeting, we now have insight into those conversations. The minutes for the FOMC, the Federal Open Market Committee, this was back from June 17 to June 18, the last time Fed met, decided not to make a cut. Those minutes have been released. There are about a handful of moments here where they mentioned housing. We'll go through that. The headline said, "Hey, most officials are seeing cuts this year coming." We saw some of those conversations over the last week, but there is some disagreement on how many. There's a couple of committee members, specifically Michelle Bowman and Christopher Waller, who have actually gone on record saying, yeah, we think the Fed should probably cut on the next meeting, July 29 through the 30th. So just in a couple of weeks. Remember, Christopher Waller is one of the names being floated out there for potential shadow chair. Okay. If President Trump were to announce now who would be taking over in May of next year for Jerome Powell, that would create a shadow chair situation. Christopher Wallace is one of a handful of names that you hear floated out. He's also been, and if he wants to remain in contention, he will be the voice that is the most bullish on cutting rates now. And Michelle Bowman joining that camp. Several officials, though, said that they thought the current overnight funds rate may not be far from a neutral level, meaning only a few cuts may be ahead. Those officials cited inflation above the 2% goal, and that's amid a resilient economy. Of course, there is, some of us that believe being over 2% on inflation is, if you take owner's equivalent rent out, is really just not even accurate, or we're just above. This inflation report this week will be as important as any, as we see if there are, in fact, tariff implications inside of this report, as we've been cautioned that this is coming and just haven't seen it yet show up in the data. Here are the mentions pulled out in the hot sheet show notes. You can grab that inside of BAMX if you're a member. Here are the mentions pulled out of the report, page 6, paragraph 4. In domestic credit markets, borrowing costs for businesses, households, and municipalities mostly edged down, but remained elevated. Rates in the 30-year were a little changed, remain elevated. So there's one mention of housing, nothing there. Do acknowledge that, you're seeing, that this is moving down, but they haven't certainly waved the winning flag here for inflation. Credit remained available for most households in the residential mortgage market. Credit continued to be easily available for high credit score borrowers, but was tighter for low credit score borrowers, despite easing slightly in May. Growth of consumer loan balances at bank was robust in April and May. Credit quality remained solid for large. So, showing a very resilient economy here. And then in the commercial real estate market, page 7, paragraph 1, CMBS delinquency rates remained elevated in May regarding household credit quality. The rate of serious delinquencies and FHA mortgages remained above pre-pandemic levels in April. By contrast, the delinquency rates on most of the mortgage loan types continue to stay near historical lows. Okay, so glad that they added that line in, or we would have seen the Darth Vader accounts on X really run, which they have anyways on this FHA, and these numbers, when you put all the mortgages together, still remain incredibly low. So we'll see what happens. They're going to meet again here in 2 weeks. It seems like it's come up fast on the next FOMC meeting. There will be some, like Waller, who will potentially be pushing for a cut now. This inflation report here this week will be critical, I think, data points for the FOMC to consider. Nobody believes that they will actually be cutting. 93% chance from the CME group that there will be no change, while only a 6.7% chance that there will be an ease. There is 2 weeks here to kind of change the minds. Poly market has a 93% chance of no cut, 5% chance of a 20 bips, and 2% chance of a 50 bips cut here on this meeting in 2 weeks. But as we move forward to September, poly market has a 25 basis point cut at 47%, but still 46%, kind of a lot there on no change. Move out to October, and it's similar to September, 52% chance it moves up a little bit on 25 basis point cut. So the expectation in 2 weeks is that there will not be a cut coming from the Fed. You finally are starting to see, instead of a unanimous opinion, though, a crack within the committee. There are at least two that have put their name to, yeah, we should probably look at cutting in July. And there are a handful that are, kind of wishy. We'll be cutting at some point this year. Don't know how many. And then there's kind of the Jerome Powell pack that does not want to engage in any conversation around cutting as early as July. U.S. asking rents have declined 4 months in a row. Somebody send that to the committee in 2 weeks. $63 below the record high. Okay. So rents continue to move down, not up. Year over year, asking rents fell 0.5%, according to this Redfin report. One of the things that's holding inflation up, and we'll see it in the data again this week, is shelter. It's owner's equivalent rent. But this data is old. It's lagging. It's as much as 2 years old. I'm not the one saying this. That's Jerome Powell. He says, as the data catches up, we'll get a better indication. Just look at the real-time data. Okay, I mean, I don't trust Redfin when it comes to their political opinions, and they have a lot of them, but I do trust Redfin on some of this data, this real-time data. They've got a lot of it. U.S. median asking rent fell 0.5% year over year to $1,642 in June, fourth straight month of annual declines. And asking rents are only $63, though shy of the record high. Remember, inflation doesn't work like coming back down to 2020 price points. Inflation works on, not having prices go up above 2%. And U.S. rent is well below that number. You're not going back to 2020 numbers. It's just a matter of getting price increases stabilized. Asking rents for 2-bedroom apartments fall the most, 1.5% for 2 bedrooms, 0.2% for 0 to 1 bedrooms, and then flat for 3+ bedrooms. Here are some of the metros to take a look at. At median asking rent per square foot, Atlanta's down 1.3%, Austin's down 2%, Buffalo's down 0.8%, Charlotte's down 0.3%, Cincinnati's a big gainer there on 3.8% increase, Cleveland's down 4.1% in this metric, 5.2% down on Denver, Houston's down 1.8%. So some major cities, Vegas, beautiful city, love Vegas, even the 110 oven-like weather. I didn't find it to be that disturbing. Down 3.1% in Vegas, 7.3% down in Minneapolis. Had a layover in Minneapolis. Not my favorite airport, but not my least favorite. There you go. There's your rental report from Redfin. A couple other things that you should be watching right now. And I'll throw a couple at you there for as it relates to rents. Ryan Serhant, who'll be with us, obviously Wednesday, noon Eastern for BAM BBQ, posted this on his Instagram. Okay, he's got 5 thoughts on the real estate climate. The market is cooling but not crashing. Let me know in the chat if you agree. Is the market cooling, or are we just in that summer and the future market could heat back up? I would say, yeah, it cools in the summer, even though the temperatures don't. Do you feel the same way, cooling but not crashing? Or are you in a market where you feel like there is a potential crash coming? Number 2, sellers are losing leverage even in low inventory markets. This remains true. Totally agree. New York City office conversions are accelerating. So looking for more inventory in New York City, conversions accelerating. The rental surge is real, and the coastal play is getting crowded. Those are 5 observations from Sirhan. If I take a look, just because we're talking about these rents, and it's gonna have implications here on the inflation report this week. Rental market is about to get tighter and more expensive. This would not be good if this is true for inflation. Oversupply is fading. Rents are headed back up. Rents are projected to climb, I think 10% a year, Sirhan said. And he says here in New York City, even more now that the FAIR Act just passed. The Fairness in Apartment Rental Expenses FAIR Act, which limits rent increases between leases, was designed to protect tenants. But Sirhan believes it will also reshape how landlords approach pricing and upgrades. Landlords will likely price in that risk up front, because obviously leading to higher starting rents, less incentives to upgrade properties, and over time it's going to shrink inventory. It's going to discourage development. One of the factors, Sirhan says, is going to increase New York City prices. Now, we're seeing rents in real time move down. That's good for where we need to end up on inflation, where we need Jerome Powell to end up, which is cutting on time, not too late like he was on the increases. Jerome Powell was clearly too late on the increases. He called inflation's transitory. Doesn't mean he needs to be afraid of inflation today. If you take owner's equivalent rent out, we're actually below the 2% target. But if this were to be true, those numbers could turn around if rents were to climb 5 to 10% a year. Do you agree with that? Is that where you see rents going in your market? Okay. So coastal markets are heating up again. Investors are back to the shorelines. I mean, listen, I know Redfin, they hate the Atlantic Ocean as much as they hate the Pacific Ocean. Anything, actually, I think they hate the Atlantic or the Gulf, maybe a little bit more. Anything that has to do with waterfront property, Redfin hates it. But Sirhan says investors don't. They're piling into beach towns, and he thinks the next underpriced waterfront market is one you might want to pivot to. So interesting there with everything going on there. Hey, shout out to Sirhan. He'll be on HBO, but more importantly, he will be at BAM BBQ Wednesday noon Eastern. BAMBBQ.live. Definitely want to stick around for that conversation that is happening at noon Eastern. BAMBBQ.live. Only way to get your free ticket there. What's not free is cash offers. Okay, cash offers each and every single week are brought to us by Zudelio, who help sponsor this show, help partner on this show, and help partner with every BAMX member on getting their platform included in the BAMX membership. Las Vegas, Atlanta, Dallas, Phoenix, and Jacksonville, top 5 cash offer markets in the last week. San Antonio, Denver, Orlando, San Diego, and Charlotte make up your top 10 for top housing markets with cash offers over the last week. Zudelio's got more data than anybody on cash offers, and they're helping agents inside of BAMX generate 4 offers on every property. If you want 3-phase marketing, actually, we drop this into every week we drop new content. And was it this past week or the week before? I think it was the week before. Week before, I said to the team, I said, guys, everybody's looking to compete with Compass. Maybe their 3-phase marketing's over now that they decided to share listings on the MLS. But I thought 3-phase marketing was brilliant. Why go exclusive when you can just set the floor with 4 real offers? Zudelio allows BAMX members to do just that. Set the floor. If exclusives is there to test price, why don't you test it with actual offers? 4 real offers, no obligation. Agents projected. Phase 2 coming soon. Phase 3 full market launch. That's a template right there for members, along with all the content that we drop right inside of BAMX on School. If you want to become a BAM X member right there. All right, let's take a look at where we're starting this week on 10-year. 4.411, kind of where we've been hanging here for the better part of the week. That is the high point for the last 30 days, essentially, and nearing high point for the last 3 months. So some of these trade deals and tariffs that are popping up, market doesn't love it, right? Stock market in particular doesn't like disruption. And that's where we've seen with the 10-year here the last week and a half, as those have popped back up. 6.82 on the 30-year. 6.72 is the Freddie Mac weekly, so still comfortably under 7%. We've been hanging around there for seems like quite some time on the 30-year fix. BAMBBQ.live. Grab your spot right now. Make sure you grab a spot. These are free virtual events. They have filled up and maxed out in the past, and then Haley gets angry messages. Why can't I get in? Just don't wait. Register now, and you'll be guaranteed your spot. 12 to 2 Eastern time on Wednesday. Leo Pereira, CEO of EXP. Ryan Serhant, CEO, Serhant Technologies. 2 brokers who are not shy about sharing opinions. And Scott Harris, the CEO of eXperience.com, I'll put him in that category. You probably don't know him if you're in the industry. But bring Experience.com outside of real estate to talk about how AI is changing which agents win online. This guy's got more experience than anybody in this topic, and he is not shy with his opinions. So you're in for a treat on Wednesday, noon Eastern. All right, there's your hot sheet here for the week, or not for the week, for today. I will be here full week. Had to take 2 off last week in the travels to Las Vegas, but I'm glad to be back with you. It's a full docket this week. Real Word tomorrow, hot sheet tomorrow. BAMX members live role play tomorrow, 9 a.m. Eastern. So before the hot sheet, jump into school, get your role play. And then, of course, Wednesday, BAM BBQ. I will be with all of you for all of it. And until then, of course, toodaloo.